Before we begin, let me ask you a question most Americans never think about until it's too late. What if your life insurance could protect your family and give you the power to adjust your payments, build cash value, and control your policy like a financial machine? That's the promise of universal life insurance, but it can be extremely beneficial for the right person and extremely dangerous for the wrong person. That's why today's video might be the most important one in your entire insurance journey. By the end of this video, you'll understand what universal life insurance is, how it works, and what hidden risks you must avoid. You'll walk away with clarity, confidence, and the ability to identify a policy that protects you instead of trapping you. So why do people even consider universal life insurance? Because ULA is like a hybrid car. It's not just insurance, and it's not just savings. It's something flexible, adjustable, and designed to give you control. But here's the suspense. The same flexibility that makes it attractive can also destroy your policy if you don't understand it. That's why we're breaking it down in the simplest way possible. Even a complete beginner can understand after this video. Universal life insurance is a type of permanent life insurance that can last your entire life. It includes a death benefit to protect your family and cash value that grows over time. But unlike whole life, universal life lets you adjust your premiums, death benefit, and even skip payments if your cash value supports it. It feels like having control of a financial engine, but the same power that helps you can also hurt you badly. If you don't understand how OL works, your policy can collapse completely. Universal life is the only type of insurance where thousands of Americans have seen their policies vanish. Most had no idea what they bought or how the costs changed over time. Today, you will not make that mistake. When you pay your monthly premium, part of it goes toward insurance costs, and the rest goes into your cash value. That cash value grows based on interest rates or sometimes stock market indexes. But your cost of insurance increases as you age. And if cash value gets too low, the policy can expire even after years of payments. This is the part many agents never explain clearly. So now, we'll break down everything you need to know. Let's start with the three main types of universal life insurance. Guaranteed Universal Life Goal is the safest version. It acts like term insurance that lasts your entire life, but has little or no cash value. It's perfect for people who want lifetime coverage at a lower cost. Indexed Universal Life IUL is the most popular and most marketed type. Your cash value grows based on the stock market index without actually investing in stocks. It offers upside potential with downside protection, but even then it can collapse if poorly designed. Variable Universal Life VUL is the riskiest type. Your cash value is invested directly in the market with high upside and high downside. It is not ideal for beginners or anyone who dislikes risk. Now let's talk about why people choose universal life insurance. Flexibility is the main reason because you can change premiums and adjust coverage. The cash value also grows and can be accessed anytime. Another benefit is lifetime protection when managed properly. You also get tax advantages like tax-deferred growth and tax-free loans. And in good market years, IUL and VUL can generate higher returns than whole life. But now let's discuss the risks that many people never hear about. The cost of insurance increases every single year as you age. If you don't pay enough, the policy starts draining your cash value until it eventually collapses. Market-dependent growth is another risk. If the market performs poorly, your cash value grows slowly or not at all. And yes, your policy can expire even after 20 years of paying into it. Universal life is not buy and forget. It requires regular reviews and monitoring every year. Early years are also weak because cash value grows slowly at the start. If you want cheap protection, UL is not for you. Term life is a much safer choice for people with tight budgets. UL is a long-term strategy, not a low-cost product. Now let's talk about real costs in the USA for 2025. Prices depend on age, health, type of OL, and coverage amount. Here are average monthly costs for healthy non-smoker. At age 30, Gold costs $70 $100. IUL costs $120, $180, and VUL costs $130 $190 at age 40. GUL costs $120, $190. IUL costs $180, $260, and VUL costs $200, $300. At age 50, costs rise even more with Go at $200, $350. IUL at $300, $500, and VUL at $350, $500. At age 60, GUL is $350, $550, IUL is $500, $900, and VUL is $600. $90 cero más. UL becomes more expensive as you age. That's why it's used as a strategy, not just insurance. So who should consider universal life insurance? High-income earners, people wanting lifetime coverage, and people who like premium flexibility. It's also good for those who want to build cash value. Who should avoid UL? Anyone wanting cheap protection should skip it. Anyone who can take a commit long-term should also avoid it. Universal life insurance can be a powerful tool or a financial disaster. It depends on how well you understand it and how well you manage it. Most regretful buyers had no idea what they purchased, but you now understand the good, the bad, and the dangerous sides. You're ready to make an informed decision, and now it's your turn to take action. Comment your age and your goal so I can guide you personally. Like this video so more people can learn the truth about all. Subscribe to Life Insurance USA for more honest and simple insurance education. Your family deserves clarity. Your financial choices deserve the truth. And that's why this channel exists.